Hi, my name is Glenn Hasselman. I'm just making this video for the free accounting software users to show you how to handle casuals in the payroll calculation rules. So the software doesn't actually have really much on the employee's record to state whether the employee is a permanent or casual employee. There is the TFN declaration that does say the payment basis, and there is an option for casual there. But the payroll robot calculation rules are not going to look that deeply into it, and I'm not sure that people necessarily keep that up to date, although you probably should. And in any case, this is a form that's completed by the employee, then lodged to the ATO. So it's probably not the right place to pick that up if we were going to use that in calculation rules. However, I also think it'd be a complicated way to do it when there was an extra casual versus permanent type parameter on the setup. So the way to do this is we go to accounts, and if you remember previously we set up this account to use on timesheets for just the normal work. What we'll do is actually set up a new one for casuals. So new account, and just call it casual work. Make it type expense, active true. This can all be blank because it's just going on the timesheet. The payment deduction type here needs to be set to time, and that's important because it won't be available to select on the timesheet line unless you set that to time. Okay, save that, and that's all we have to do as for setting up this casual work account. Now, back here there'll be another account we need. We've got normal time there, but we're using that for the permanent staff, so we can't use that for the casuals. That's the one we just set up. So what we need is another one of these normal time things, but for casuals. So select new account and put normal time bracket casual. Make it an expense, active true, apply super is true, apply leave is false, casuals don't get leave, tax code is gross taxable pay, payment deduction type is earnings. Now this is where the casual is different to the other normal time, and that is this says 1.25. So let's say this for this organization the casual is getting a 25% loading. It's not always 25%. It will depend on the award, and you have to look that up and put in the appropriate normal rate multiplier there. So the key there is that the employee is set up as their normal rate on the employee record is excluding the casual loading. So this is going to add the casual loading. Okay, and the other difference from normal time is that apply leave is false as well. Calculation method is irrelevant for payroll. Provision to use on calculated lines is gross taxable pay, and calculation stage is blank. So yeah, although you've got gross taxable pay up here, you do also need to select it down here as well. Okay, so having done that, we can go and set up some calculation rules, and new calculation rule. I'm not going to do the full setup of this because I'm just demonstrating the basics of this, but casual Monday to Friday. So previously we had a roster which was like the 8 hours on the Monday to Thursday, and then the 6 hours on the Friday. I'm not going to be bothered with that level of complication on this because it's not. You might have to do that, but we've already done that with the other example, so there's no need to do it again here. Now we want this to apply to the attendance type, or sorry, the account casual work. So when we use casual work on the timesheet, we want this rule to be triggered. Now, I'm just going to put from 0 hours to 10 hours, which or in fact I'll put 9, but with casual sometimes it's like up to a certain number of hours per day, and then there's a limit on the weekly hours that can be normal time and things like that, and you have to check out the rules yourself, but I'm just demonstrating that it doesn't need to be 8, it could be whatever. The thing is that this might not always give you the right result, and it might give you the result 90 to 95% of the time, but if for some reason a casual worked 9 hours every day, that might be the wrong result, and then you have to manually change that payslip. So these calculation rules, it's very hard to get, sometimes very hard to get them exactly right, or the work you'd have to do to set them up to get that last 5% is too much, so you just go for the them being right, and most of the time employees are not working such strange hours, so it doesn't normally cause a problem. We want to pay the hours / quantity of the matched rule, and 1 times that. Apply separately to each day. And save. Okay, now we can go to do a payslip. In fact, I will set up a new batch for the next pay week. I think we've done enough on that original pay week. And put in a new payslip. Just shrink down the font so you can see all the boxes there. Okay, add the timesheet line. Now when I add the timesheet line, I want to select casual work. Okay, so this is how the software knows to pick up the casual calculation rules rather than the other ones we've previously set up. And then calculate, and we get normal time casual. Okay, so this employee was set up with a pay rate of $30 per hour, and so they've got the 25% casual loading to take them to the 37.5. Okay. Might just save that. Okay, now that's the first part of paying casuals. The next question is probably going to be, well, what about the weekend rates? And I'll demonstrate that in the next video. Anyway, I hope this video has been useful, and thanks for watching.